Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday, July 5th. We have a nice little short weekend here, or a short week here with the July 4th here yesterday. Hope you guys had a good, safe holiday. And then heading into the weekend here, we got just two economic news releases scheduled for today, and that is the non-farm payrolls, which we've been waiting for. This is the big number probably for the month. This is what the Bureau of Labor Statistics brings out, and then this is for the month of June. So we had 195,000 new jobs created last month in May, and the forecast for this month was supposed to be tapered for June for about 155, and it came in at 195. So a decent number there, higher than forecast. And then we also got the unemployment rate for the month of June. So we had a 7.6 rating. They thought it would come down a little bit, and it actually remained the same. So 7.6. We're still at stuck at the 7.6. Fed said 6% range, so we're still a long ways from that the unemployment rate that the Fed had indicated to us that they would use before they would cut off the QE that we've talked about. So let's go ahead and jump over to the over to the headline news here, and currently stock market's up. Now remember, we got the amateurs at play today. The big boys on Wall Street, the big hedge fund guys, are basically taking the rest of this week off or spend their time up at the Hamptons, which is usually the case. So we have kind of amateurs. Kind of the day traders, the amateurs on Wall Street that are kind of doing their trades today. So it's a lot lighter because we don't have the big bulks of what we would typically have on a normal day-to-day basis without the big boys. So this could change obviously on Monday a little bit. Now, granted, this are good economic news, so stock market should be up, but pay close attention to hear how it's affecting the bond market here. We have a huge opening gap, about 100 basis points lower, which is equivalent to 1 point, and now we're down about another 56. So we're nearly 200 basis points. We're basically about 190 basis points off, so meaning almost 2 points. That no point that cost you on Wednesday now would cost you almost 2 points to get that same rate. So that's basically what this is telling you. Now, I do believe because it is amateurs, we would probably see some correction in here. It was good news that we received, but not good enough to see this much of a sell-off on the bond market. So wait until next week. It will probably kind of ease its way back in. It may take a couple of days, but I think you'll see some improvements next week. It doesn't warrant this big of a sell-off uh, from this type of news here. And next week will be kind of lighter, so we'll have probably a little bit more technical. Some stuff we may see next week that could play more into the equation might be like Egypt with the protests going on over there, or more European news, or even China. More, they're showing that they're still slowing down and such. So those are things that could play a part next week. But hang in there. Rates jumped up tremendously today, as I mentioned, almost 2 points today as a result for the amateurs. So let's hang in there, and next week I think you'll see a better week or better pricing. All right, folks, have a wonderful weekend. Thanks for watching, and see you guys on Monday.